Good evening, friends. A warm welcome to all. Today, the webinar is on procedure of job work under GST. What is job work under GST? The definition of job work under GST is covered under Section 268 of the CGST Act 2017, which states that any treatment or process undertaken by a person on goods belonging to another registered person. Therefore, a job worker is the person who is processing or treating the goods of another registered person, and the owner of the goods is called the principal in this respect. And for this, we have our guest speaker, CA Shankara Narayanan V. He is a member of GST study group of ICAI. He is member trainer of GST affiliated by Institute of Chartered Accountants of India. He is contributor as part of the ICAI team in charge of preparing and updating background material on GST. Trained more than 2,000 chartered accountants and 6,000 plus finance and accounts professionals across India on GST law and practice and indirect taxes. He is member of Governing Council and Secretary of International Chamber of Indirect Tax Professionals. He is member of Indirect Taxes Committee of Hindustan Chamber of Commerce. And we have with us none other than CA Vivek Khuranaji, founder of CA Sansaar, and his name is just enough for the CAs. Now, I would request him to welcome him and give him a welcome address. So please.
Thank you very much, Stuti ji. CA Shankara Narayanan ji, speaker of this webinar, CA Stuti Mahajan ji, all respected member of the profession, a warm welcome to all of you at this webinar on job work under GST. And I hope everybody is fit and fine. My sincere thanks to Shankar Narayanan ji for giving his valuable time. Because it's the first time he came on this CA Sansaar platform. So, sir, a warm welcome and many thanks to you. And today's topic, we have received many requests to organize a webinar on the job work, because there are many confusion whether it's a job work or the goods, because departments wants to do more and more taxes. But from our part, we want the true thing, it's the job work. So many litigation, many different perspectives are there. So for that, we have very learned, very respected speaker of the day, who will guide us regarding all the procedural aspects of the job work under GST. So now over to you, Shankarji. So please start the session.
Thank you. I'll just take a minute to share my screen. Good evening, everyone who are connected to this session. Thanks a lot, Shri Vivek Khuranaji, for organizing such a session. In GST, one thing that we have to be very aware of and be always ready is we should be updating ourselves every minute. Now, as we were preparing for this webinar, I think some 8 minutes back, we got a sudden tweet saying this is what the CBIC has released as a press release. So I thought it will be appropriate to include it in the initial discussion, because since yesterday, the most fuming topic is the interest, where they have notified that the interest on delayed payment, which is only on the net basis, that is only on the amount which is paid through cash ledger, on that amount only interest is applicable, and that provision has been notified to be effective from 1st September 2020. But on 24th March 2020, post the 39th GST Council meeting, where it was declared in the press release that retrospectively the interest will be made only on net basis and it will not be on gross basis. So a lot of representations have gone in, which has forced the CBIC to come up with this press release, which has just come a few minutes back, wherein they have clarified that no recoveries will be made for the past period, both by the central as well as the state tax administrations, because in line with the 39th GST Council meeting. But then some of us might wonder, why give a press release? Why not notify this amendment to be effective from 1st of July 2017? I'm afraid that is not possible because this amendment came as part of the 2019 CGST Amendment Act. So when it was made into a provision in CGST Amendment Act 2019, it was not envisaged as a retrospective provision. Whereas if you had looked at the earlier retrospective amendment which had come in the CGST Act 2018 with respect to the transitional input tax credit, wherein they had clearly mentioned that this is effective from 1st July 2017. So when the section was created, when the amendment was made, at that time itself, it was clarified that it is retrospective. But that was not the case when this interest section 50, subsection 1 proviso, which was inserted by the amendment in 2019, it was not intended to be done that way. It was intended only prospectively. But in March 2020, they had taken a decision to make it retrospective. Hence, I feel it will go through another GST amendment bill converted into an act, and subsequently we will see that retrospective amendment. So at this juncture, we need not worry much about paying GST on gross liability, that is the interest on gross liability. That is the news I wanted to convey, because maybe that will calm down some of the nerves before we get into today's discussion, which is on job work. So one of the areas which was very much important in the erstwhile regime of central excise, but post introduction of GST, wherein anybody that is in excise regime, we had a clarity in terms of manufacture, giving it for job worker. But once GST came into picture, the fine line of difference between a manufacturer and a trader is no more relevant. So anybody is a taxpayer. As long as you are paying, registered under GST and paying tax, you are a taxpayer. There is no basic distinction between whether somebody is a service provider or a supplier of goods also. Moment you get a registration, you are entitled to do everything. Hence, job work provisions is equally applicable for all of us. And where it will have the applicability and where all we have to be careful when we look at it, and especially the professional fraternity, where we have to be careful enough to advise to the clients as to how it has to be done, is what is going to be the objective of or the agenda with which the presentation will be done. So as Ms. Mahajan has set the tone at the start of the session, what is job work? Where is the definition residing? It is in 2 subsection 62 of the CGST Act, where it says job work means any kind of treatment or process undertaken by a person on goods belonging to another registered person. The key word here is to another registered person. So what is job work in the eyes of GST is, I should be working on your goods. I am a person, I may be registered or unregistered, that doesn't matter. But I should be working on your goods and you should be a registered person. The goods to whom it belongs, that is, the services are done to the goods and the goods belong to a person. The person who is the owner of the goods should be a registered person. Then it is considered to be a job work. And what is the taxability of a job work? Schedule 2 says that any kind of activity that is done on the goods belonging to another person shall be taxable as service. So there is no doubt that in GST, if you can qualify your activity as job work, then it becomes service. So as per the provisions of Schedule 2, read with Section 7, where we draw the line as to whether it is a supply of goods or whether it is a supply of service, job work is no doubt a supply of service. But the question is whether we can fit a particular activity within the framework of job work is what we have to analyze. And when it comes to job work, what is the HSN under which the job work related activities are given in GST is the HSN 9988. Any manufacturing services on physical inputs owned by others. So the goods owned by others, if I do anything, all that will be classifiable under 9988, which is what is the appropriate provision or appropriate classification for the job work activities. And is there a one rate for all the job work activities? I think that is where we'll be spending the next few minutes. All possible rates are applicable. I have left 1.5 there. Even that is there for job work. So we have 1.5%, 5%, 12%, 18%. All these rates are different kinds of job work, different types of industry, different rates are applicable. We will try and explore the basic tax rate itself as to which industry, what is the rate, which type of job work, what is the rate. Now that will give us a lot of clarity in terms of moving forward and discussing about the provisions, because one area where I feel job work related litigations can come in future is the classification. Under which head it is being classified, as I said at the start, whether it is job work at all is a question that we need to answer. If it is not a job work, then is it a service? If it is not a service and if it is a goods and we are calling it as a service, then we are going to have a problem, because composite supply has got a separate implication where the principal supplies rate will be taken. If they classify the goods as the principal supply and the work that is done as a subordinate supply to it, then it will become taxable as goods. So first question that needs to be answered is whether it is a goods or a service, and then we need to fix as to whether it can fit within the job work criteria. So classification is one area where I feel job work can lead to a litigation. One. And second area where the job work related activities we have to be very, very careful is the valuation. I've got some case studies to discuss later part of the presentation as to how valuation can become a pinching point in the job work activities. So moving to the taxability of the transactions of job work. The 5% rate is applicable for certain transactions. That 5% rate is applicable in case of textile and textile related products, any job work done on that. Any job work done on textile and textile related products which are falling within the chapters in the HSN 50 to 63. Anything done on that shall all come under 5%. For example, dyeing, all those kind of activities. And then the jewelry related, all the products other than diamonds. So not diamond related work, anything that is falling under chapter 71, jewelry related, but other than diamonds shall fall under 5%. The reason that I have highlighted the other than diamonds is because for diamonds, there is a separate job work rate. So if I am doing, you are giving me the diamond, I am preparing it into a finished, let's say jewelry, then there is a separate rate for it. But if you are giving me gold or you are giving me an order to prepare certain items of jewelry, which could be gold or any other bullion metal, then in those cases, it will come under 5%. So a job work which is pertaining to goods falling under chapter 71, which is other than diamonds, then it comes under 5%. And processing of any kind of hides, skins, the leather industry oriented, falling within chapter 41, will all come under this 5% taxability. And then manufacture of clay bricks, which are falling under HSN 6901, will all also come under the activity of job work. So if I am doing a manufacturing of brick, is it a manufacturer? Am I supplying goods? If you are doing it for somebody else, the clay belongs to somebody. You are just digging out the clay and you are going to make it into a brick. Then whatever you are doing is considered to be only a manufacturing service, which is classifiable under 9988, taxable at 5%. And all food products which are falling within chapter 1 to 22, any kind of services done towards that. It could be, say, a coconut oil, job work in relation to coconut oil, or it could be any kind of food item, let's say chocolate or biscuits, or even the edible water or ice. In relation to that, there is some job work. Then all that, if the main item in relation to which the job work is being done falls within chapter 1 to 22, the job work is taxable at 5%. And the allied activities which can also come under this 5% are manufacture of any handicraft goods. So any handicraft goods, if I am doing a manufacture, it will attract a job work of 5%. Handicraft goods per se may be exempted, but any job work on handicraft goods will result in 5% taxability under job work. And any leather goods or footwear. Now earlier we saw that leather related products which are wearables, the hides, skins and leather which are cut and used for garments or usage akin to garments, chapter 41 will come under 5%. The manufacture of leather goods for other activities like the footwear or any kind of other wearables will all come under the 5% category, because all these will fall within 42 to 64. So these are the general 5% job work category. We have got some very, very important aspects associated with it, which I will discuss, especially the inverted duty structure refund, which I will discuss once we finish the taxability portion of it. Now moving to the next one, the food and food related industry, we saw that chapter 1 to 22, which is generally consumed by us. All those products, any job work comes under 5%. Even the ones which coming under 23 will also be coming under 5%, except when a case it is going to be a dog or a cat food, which is put up for retail sale. In those cases, any job work done for that will not come under 5%. So those will be taken to a higher rate. What will be that higher rate? We will see the methodology to identify the rate also. So these are the initial 5% job works, which are specifically mentioned in the notification pertaining to the rates on services, which is notification number 11/2017 in case of the CGST rate notification, or which is 8/2017 in case of IGST rate notification. The other job work related rates which are unique and which warrant our attention are the job work which can attract 12%, 1.5%, or 18%. Like I said earlier, we have seen 5. So there are also other rates which are applicable for job work. Which are those which are attracting this 12% or 1.5 or 18? The 12% rates is pertaining to manufacture of any umbrella, and 1.5% is attracted for diamonds. So this is where I earlier had mentioned that if it is going to be falling under chapter 71 other than diamonds, the job work is 5%. If it is diamonds related job work, it is going to come within the purview of 1.5%, though both the items, the output which is going to come is classifiable under chapter 71 of the HSN. The tax rate will change depending upon whether it is diamond related job work or whether it is other than diamond related job work. And can 18% be also be a possibility? Yes, a specified 18% is there. There is a generic 18%, which is anything that is not coming within the purview of whatever has been specifically told, generally will come under 18. But there is a specific 18%, which was a clarification or an amendment which came only in last October, effective 1st October 2019, which is specifically relating to job work in relation to bus bodybuilding. Because there was a lot of questions being asked about bus bodybuilding, whether it is considered to be a supply of goods or a supply of service. Because strictly speaking, if I get a contract for doing a bus bodybuilding, 15 lakh rupees is what is the money that I receive from my principal, that is the person who's owning the basic bus. On the basic bus, we build the body in terms of whatever is his requirement, whether it is a seated requirement or whether it is going to be a sleeper kind of requirement, all that is taken care by you. And for the 15 lakh that I received as a consideration, majority of my expense is going to be around the material only. Maybe 10 to 12 lakhs will be on material. The remaining is only going to be service. So the 15 lakh rupees which I have received as consideration, there was a lingering question right from 1st July 2017 as to whether it can be considered as a supply of goods or a supply of service. And most of us were of the view that since it is a work or a treatment or a process which is done on the material that is belonging to another person, the goods belongs to another person. Of course, yes, the steel and other stuff are procured by me and put as part of the process. But the basic goods, the basic bus belongs to one person. I am working on it. Then it shall only be considered as job work, which was rightfully clarified by the department. And they have also given a sort of benefit to them by saying it is taxable at 18%. Why it is a benefit if it is taxable at 18%? Because generally the steel and steel related items which are procured for the purpose of bus bodybuilding will all come under 28%. So there is a leeway for this person in terms of inverted duty structure refund, which, as I said, we will discuss a little later. So these are the general list of services which can come under 12, 1.5 or 18%. Now we have a unique discussion on one industry, the printing industry, and printing industry related taxability under whether it is goods or a service and how it impacts the job work discussion. Now in printing related activities, right from day one, there was a question whether printing is a manufacturing process on which is considered as job work or whether printing is considered to be a goods. Let me give an example. In the erstwhile excise regime, printed books were considered to be a manufactured item. When I print the books, it is considered to be a manufacture. Whether I do it for myself or whether I do it for other person, in either of the cases, it was considered to be amounting to manufacture and I was liable to pay excise duty. Now here I am sitting and doing the printing. Now I was paying excise duty in the erstwhile regime. From 1st July 2017, people had a doubt. Sir, I am printing books where the intellectual property rights, the copyright, the technical know-how of the book is coming from the author or is coming from the publisher. Let's say Oxford University is giving me the content. They are the owners of the intellectual property right. I am sitting here and I am printing the book as per their specification. They're not giving me any materials. They're just giving me the intellectual property right and they are saying this is what is that you have to print, and I am buying the paper, I am buying the ink, I am incurring all the expenses for bringing it out as a book. Now, is it an outward supply of goods or an outward supply of service? The first question that we had. The second situation which happened in the same printing industry is the intellectual property right belongs to the publisher, belongs to the author. Now the author is engaging me as a printer, where they are saying, you don't worry, I will give you the material, the GSM paper, whichever GSM I want, I will give the paper, I'll give the wrapper, everything I'll give, including the ink I will give. You just do the printing. This is the second possible type of contract that was happening in the printing industry. And then we had the third type of contract where it was not involving an intellectual property, maybe like a letterhead or what we generally use, a visiting card, a marriage invitation. In all these cases, there was no intellectual property right that was involved, irrespective of whether my customer supplies me the material or he doesn't supply me the material. What should I classify it as? Is it a supply of goods or is it a supply of service? This three kind of activities relating to printing industry was a huge question that was lying unanswered. But within few months of introduction of GST, the circular 11/2017 was given specifically to address this point pertaining to printing industry, where they had asserted that in the first two scenarios, where the IPR is involved, the intellectual property right, you are the owner of the intellectual property right, you give the intellectual property to me, that is the content to me, and that intellectual property oriented content, I put in my material, I publish it as a, print it as a book and give it to you. It is considered to be a service. A startling clarification, because we were thinking that when I print the book and give it to you, it is all my material, it is considered to be goods. But they said no, it is considered to be a service. And further they went and said, if the IPR belongs to me and I give you the materials also, meaning the paper and ink also is given by me, now you do the printing, all the more reason to call it as a service, and service being a service under job work. So these two activities, moment they started calling it as service, and especially the first one, which is the one in the bottom of the screen, where the intellectual property alone belongs to them and they ask me to print and supply, till today it is a point of discussion. Because look at the interesting aspect it throws open. I am sitting in India, you are outside India, let's say you are in UK or you are in US, you are giving me an order, you are giving me the intellectual property with which the book has to be printed. So maybe you have given me the intellectual property right with which I have printed the books. Now these printed books, you are asking me to supply to a person in India. I am sitting in Chennai, you are giving me an order from US, and the intellectual property is transferred by you over the internet. It is not transferred in my favor. You have just given it to me for the purpose of printing. So I use the intellectual property, do the typesetting, do the printing, finish the books, and you ask me to deliver these books to your person in Delhi. I go and deliver the books in Delhi. In GST, this transaction is considered to be a supply of service. It is not a supply of goods. And I'll go one step further. It is treated as a supply of service, where we can even classify it as an export of service, because the recipient is being situated outside India. I'm receiving the money in convertible foreign exchange. The place of supply is where the recipient is located. Supplier is in India, recipient is outside India, place of supply falls outside India, money is received in convertible foreign exchange, and we are not merely establishment of the same entity. Section 2 subsection 6 requirements, everything is fulfilled. That being the case, I readily become eligible to call it as an export of service. But physically, the goods have never left India, because the goods have lost their relevance there, because as per the circular's clarification, it is not supply of goods, it is considered to be a supply of service. One. And if it is going to be not involving an intellectual property right, in those cases, they have categorically come out and said that it is only going to be considered as a supply of goods. So there is no ambiguity. If it is going to be a letterhead, if it is going to be a, say, my covers or ID cards or even my visiting cards, marriage cards, anything, where there is no intellectual property involved, Whether I give the material, you print it and give it to me, or I just give you the content. I just tell you as to this is the specification, name and address. You print it and give it to me. In either of the cases, material is supplied or not supplied, it is considered to be a supply of goods. That is what is the clarity that has emerged from this circular 11/2017, which we will have to take into context when we are understanding the printing related taxability. Now, printing related taxability, what they have said is the taxability happens either between 5% or 12%, different scenarios. The 5% when I print and give it to you. Any printing of newspapers on my own account. When I print newspapers, journals, or periodicals, it is considered to be a process and it is taxable at 5%. If yours, that is goods, belongs to you and you give it to me for printing, again, in those cases, if the goods are falling under chapter 48 or 49 of the HSN chapters, then those goods which are taxable at 5%, falling under 48 or 49, which are taxable at 5%, my job work shall also become taxable at 5%. Suppose the output of what I do based upon the printing contract that you have given to me falls under 48, 49, but it attracts 12% GST, then my job work shall also become taxable at 12%. So this is what is the treatment or the specific treatment given to printing related services, which again is a huge component of job work activity. So job work, what is the rate that we need to take? As I said earlier, there is a clarification given in December 2019, wherein they have given the methodology to determine how to determine what is the rate of my job work. Step 1, see whether there is a specific rate that is available for your service. So all we need to do is find out whether it is a service. If it is a service, classify it under the 9988 explanatory notes under which head it will fall. In that HSN, find out whether there is a specific rate for your service. Situation 1. Or if there is no specific rate, see if the recipient happens to be a registered person. Situation 2. And third situation is any other case. How to go about the rate identification if it is going to be the first situation of when a specific rate is available and that is the rate that shall be applicable irrespective of whether your recipient is a registered person or not. Irrespective of whether your recipient is registered or not, that specific rate shall become applicable. Whereas when there is no specific rate but my recipient happens to be a registered person, this is the key amendment which had come from 1st October 2019, wherein they have revised the rate to 12%, especially pertaining to manufacturing industries, various kind of processes which are part of the manufacturing activity, which are being done by job workers, where the earlier generic rate was 18%, but they made it to come to 12% by using this provision only, meaning using this interpretation, where they cannot list all the services which can come there. What they have just simply said is, if there is a specific rate for your service, whether the recipient is registered or not registered, that is the rate that shall apply. If there is no specific rate in the list that is given by us in the notification 11/2017, or in case of CGST rate, or 8/2017 in case of IGST rate notification, if the specific rate is not available, then let's go and pick up the rate which is generic if the recipient happens to be a registered person. If the recipient is not a registered person, then we don't have any other option to go and adopt the 18% category, which is what is applicable in all other cases. Now, the specific rate is available. I'll give an example. In case of tailoring services, specific rate of 5% is given. So, irrespective of whether the recipient is going to be a registered person or an unregistered person, specific rate shall only apply. But in case of machining, drilling, or any kind of steel-oriented activities, there is no specific rate, but it is mentioned that if it is a job work. So what is the job work? Where the recipient has to be a registered person. If the recipient happens to be a registered person, then the rate shall only become 12%. In all other cases where there is, we cannot fit it within specific rate, and the recipient doesn't happens to be a registered person. In all those cases, we have to go for all other cases where the tax rate will be 18%. And in case of bus bodybuilding, there is a specific rate which is 18% itself. So we don't have an option. We have to go for 18% only. So the 18% or 12% is not determined by the service only. We'll have to go through the interpretation of those rates also to identify this in terms of who is receiving it. This order of interpretation was clarified only in December 2019 by way of a circular, which is very relevant again in case of identifying the tax rate which is applicable for job work. Now, few points that I wanted to discuss about the procedure, but before going into that, relevant thing which is happening currently, which I wanted to highlight in case of job work, is that especially those job works which are coming under 5% or lesser than 5% in case of diamond, that is 1.5%. In these cases, what happens is my inputs are being taxed at a higher rate. Now, when I say input, I am still sticking to the definition of inputs as per section 54 subsection 3, second proviso, saying that it is still the inputs only are eligible for inverted duty structure refund. So though 54 subsection 3 doesn't say anything, rule 89 sub rule 5, they have made a provision that in case of inverted duty structure, ITC pertaining only to inputs will be given as refund. Input services, capital goods related ITC will not be given as refund, is what is the position of the department. Couple of weeks back, VKC footwear case, Gujarat High Court has given a judgment saying inverted duty structure, even input services to be taken into consideration for calculating the refund. So that is where we are standing, which is a crucial juncture, because many of the job works which are happening at 5%, let's say a textile dyeing unit, in their case, what happens is the dye that they procure is 12% or 18%. Maybe they are getting it done by somebody else. There is a job work content that is there. There is an input service that they get. There is an input that they get where the rates are exceeding 5%. So what invariably happens to them is they will always have higher amount of input tax credit as compared to their output tax liability. The accumulation of more input tax credit is not on account of stock, it is on account of the rate variation. My inputs as well as input services, which I am including by the confidence given by the Gujarat High Court judgment, both input and input services related ITC are coming at, let's say, more than 5%, 12 or 18%. But my output is taxable only at 5%. And my output happens to be a service. Am I entitled for inverted duty structure refund? The answer is yes, we are entitled for inverted duty structure refund. The restriction on inverted duty structure refund is only on inputs, not on the output. My output could be goods, my output could be services. So even before this judgment, we never had an issue in terms of whether a person who is providing a service, is typically a job work service, which is taxable at 5%, can he go for inverted duty structure refund? Yes was the answer. We were always entitled. Now this judgment has given us the further buoyancy to claim not just the input related ITC. We can also claim the input service related ITC, or we can attempt claiming, and maybe this is further appealed by the department and we get a Supreme Court judgment, or you yourself can take it up as an litigation in the respective high courts of your state, or you get a judgment in your favor. Yes, this is how I think it can progress. So a key problem, especially for the job workers alone, if you're looking at a job workers accounting, there he might have an issue where if they are coming under this 5% category, inverted duty structure refund is eligible for them. The latest judgment gives them further teeth to get additional refund. That is the point that I wanted to convey after immediately discussing the rates. Now we will get on with the procedures pertaining to job work. Now there are two key sections that one has to be aware of when we discuss the job work provisions. One is section 143 and the other one is section 19 of the CGST Act. These are the two places, if we can go through, we are getting the maximum information in terms of job work related activity. We can also traverse to the rules, rule 45, for that matter, even delivery challenge rule 55. These will give us the further information in terms of job work related activity. Now, what is there in section 143? Section 143 is the one which empowers the job worker to send the goods, rather the principal, it empowers the principal to send the goods to the job worker without payment of tax. So whenever I am removing the goods from my premises, it is considered to be not used in the course or furtherance of my business. So there is a possibility that the officer can deem it to be a supply and ask me to pay GST. That deeming fiction is put on hold. It is not completely extinguished. It is only put on hold by section 143, which tells that these goods can travel to the job worker provided you satisfy the other conditions which are mentioned under section 143. So conditionally it is put on hold. There is no supply. It is not treated as a supply. It is only the goods going to the job worker. Further, the conditions that are put out is what has gone to the job worker if it happens to be an input. And in GST, goods can come under only two categories. It can either be inputs or it can be capital goods. If it happens to be an input which is sent to the job worker, so which means I have to get it back as a material. The input that goes, let's say part number A goes and it has to come back as part number B. Then whatever I send should come back within 1 year. The goods at which I am sending it to the job worker as inputs shall have to come back within 1 year after processing or without processing. Doesn't matter. It has to come back within 1 year. And if I am going to send capital goods, what I am sending is not just inputs. I am sending inputs also, and then I am sending capital goods also. Because in some of the cases, I might have the machinery. The machinery, I am sending it to the job worker. And my job worker is going to use that machine of mine to process my goods and give it to me. So at the end of the day, he is still working on my product only. So the capital goods can also go to the job worker's premises. But in case of capital goods, we have a further timeline in terms of 3 years. So it has to come back within a period of 3 years. 2018 CGST Amendment Act, notified from 1st February 2019, brought an amendment. The amendment which it had brought was this period of 1 year and 3 years shall be extended by the commissioner if we give a requisition, and the extension can be for a further period of 1 year, which means in case of inputs, 1 year is the timeline. So maybe at the end or near to the expiry of 1 year, if I go and appeal to the commissioner, meaning give a request for extending, the commissioner can maximum extend it up to another 1 year for inputs. And in case of capital goods, this further extension can be sought for another 2 years. So in all, 1 year and 3 years can become 2 years and 5 years, but that is subject to the commissioner's approval. The straightforward time limit which I have got to bring it back is 1 year and 3 years, which is already available for me directly under section 143, read with section 19 of the CGST Act. And then a very important exclusion. In case of the capital goods, especially which are in the nature of molds, dies, jigs, fixtures or tools, 5 items which generally travel in case of an automobile industry or in case of an engineering industry from the manufacturer, that is the original equipment manufacturer, to the job worker. Generally it goes. The capital goods which are in the nature of these 5 categories, molds, dies, jigs, fixtures or tools, for these items the time limit of 3 years is not applicable. What does that mean? It is actually a benefit for the assessee. I can send a mold to my job worker. The job worker is able to do with that mold 5,000 units, or let's say 5 lakh units out of that mold. Then the mold becomes disfigured. It is not able to give the same sharpness. Then he can discard the mold. There is no compulsion that the mold has to come back within 3 years. Maybe he can even develop another mold with that mold. He will further machine it and make it into a different mold usable for some other manufacturer. That is also allowed. The mold, dies, jigs, fixtures or tools which come under the capital goods category, which are sent to the job worker, there is no need that they have to come back. But is there a need to maintain the inventory? Yes. What is sent to the job worker has to be maintained by the principal. That control is still with the principal. That control will be expected in the principal's book. But should it come back within 3 years, the leniency is given there only. And further on the procedures pertaining to job work, where there is a confusion or an ambiguity which was there in the earlier days, I'm hoping that it would have got settled by now. I'm sending the inputs to my job worker's premises. Maybe it is an input or it is a semi-finished product. And the semi-finished product or the input gets finished. It becomes a final product. And it is ready for supply. There are 2 possibilities that can happen here. One, the finished goods can come to my factory, again, my premises, rather from the job worker premises, and then it can get billed from my premises. Situation one. Situation two, I can directly send it from my job worker's premises because logistically that would be more prudent. Rather than incurring one freight and then sending it for another freight, it can directly go from my job worker's premises. Is it allowed? Yes, absolutely allowed under GST, but there is a condition. If I am going to use my job worker premises from where the goods are going to be delivered directly, that is, the supply is going to happen from my job worker's premises, then my job worker has to be a registered job worker. Or if he says, no, I will not get registered, why should I get registered? Then I should include the job worker place as my additional place of business. So this is what is something which is unique restriction. Should my job worker be always a registered person? Not necessary. Only if you are going to dispatch the goods from the job worker premises to your customer. The supply of goods are going to happen from job worker premises to your recipient. Then the job worker has to be a registered person. If the job worker still says that I am below 20 lakhs, why should I get registered? No issues. He can stay as unregistered person, but you have to add him as an additional place of your business. The challenge that most of us would face, especially in the NCR, National Capital Region, is that we have the 3 states. The issue that can arise is somebody in Delhi has a job worker in Gurgaon. So he sends the job items to the person in Gurgaon, gets it finished, and from there, maybe he is supplying to a person in Manesar, sending it directly from Gurgaon to Manesar. Is it allowable? Yes. But here, the job worker has to be a registered person because the principal sits in Delhi. The job worker is in Gurgaon. So from Gurgaon, it has to go to Manesar. Then it is a movement from the job worker premises and it is for a supply. The job worker has to be a registered person. The job worker says, I will not get registered, sir. Then the Delhi person, can he add the Gurugram premises of the job worker as his additional place of business? He cannot, because these are 2 different states. Delhi, for the purpose of GST, is considered to be a state. Hence, I am using the word state. As per Article 1 of the Constitution of India, it is still considered to be union territory. But for the purpose of GST, you have an SGST there. So the one in Delhi, can I include the premises in the other state as my additional place of business? Not possible. So this is a problem area, especially in the borders. For example, in Tamil Nadu, we have this issue. Bangalore and Hosur. Hosur, which is just 40 kilometers away from Bangalore, is part of Tamil Nadu. A huge industrial sector is there who are catering to the manufacturers in Bangalore or vice versa. Hosur manufacturers are being supported by job workers in Bangalore. Now, in this case, the distance is 40 kilometers only, but my job worker is an unregistered person. But if I'm going to dispatch the goods from my job worker premises to my end customer, then my job worker has to be a registered person. I cannot add him as an additional place of business unless I am registered in Karnataka. The same with respect to the Delhi person example which I gave. Unless I am registered in Haryana, I cannot add the Gurugram job worker place as additional place of business. Hence, whether my job worker has to be mandatorily a registered person, I think this answers the question. Unless you are dispatching from his premises, I don't see any need for a job worker to be mandatorily a registered person. And for the service providers, October 2017, where we got the notification saying that even if their interstate turnover, in case of a service provider, is going to exceed, or rather, it is going to be there and it is not exceeding 20 lakhs, they need not get registered. The initial days of GST, Section 24 made it mandatory that if you do an interstate supply, you have to get registered. But in case of a job worker who is a service provider, so they have said that in case of a service provider, the limit of Section 22, which is 20 lakhs, shall apply. Even if you are doing interstate supply, only if you cross 20, you have to get registered. So more job workers were becoming unregistered, which is allowed, and especially after 9 subsection 4 being diluted from 13th October 2017, where unregistered person procurement we are not liable to pay under reverse charge. Generally, apart from the real estate developers, in all the other cases, I think the job workers are still allowed to be unregistered as long as their limits is not breached. We can still dispatch the goods from the job workers' premises if we are able to add their place as additional place of business. Moving further, the accounting responsibility of the goods and the movement of the goods lies squarely with the principal. Rule 56, read with section 35 and 36, clearly clarifies it that who's in charge of the goods, who's the one who's responsible for the goods, who's answerable for the material movement. Everything is on the head of the principal. The principal shall only take that responsibility completely. And on to the other part of the job work process. What will happen if the goods are not returned within the time limit which is prescribed? What we saw earlier, let's say 1 year and 3 years. We'll stick to that. We will not discuss about the extension. Assuming 1 year, within 1 year the goods are not returned in case of inputs, and in case of capital goods, it is not returned within 3 years. What is going to be my impact? The impact is damaging. One, the original movement which was made from our premises to the job worker premises, that movement will be deemed to be a supply. The original movement which we made will itself be deemed to be a supply, which means retrospectively we will become liable to pay GST. Hence, automatically, what will happen to us is we are liable to pay the tax along with interest. And they have said in Rule 45 that if it is possible, you can report it as an invoice in the GSTR1 itself. This will result in an accounting tangle. How? I'll take a practical case. 1st January 2019, I have sent the goods to my job worker. Job worker has not returned the goods till, let's say, 1st January 2020. So on 1st January 2020, on the expiry of 1 year, I have become liable for making a deemed supply. Is it a deemed supply under Schedule 1? No, it is a deemed supply under Section 19, read with Section 143. So deemed supply is not something which is residing only in Schedule 1. It is there in these two sections also, which is why in GSTR 9, Table 16 was introduced. But for 2017-18 and 18-19, department had said that it is not mandated by way of press release. So when it is optional, none of us will fill it up. But there you would have seen this information being collected. When goods are sent to a job worker, not returned within the timeline, have you treated it as deemed supply? And how much of the supply during the year has been treated as such deemed supply? A very important question that when we are doing our GST audit itself, we have to ask the assessee. So this deemed supply, will it arise? Yes. And how do I report it? As I said, if 1st January 2019 is when I have sent it, 1st January 2020, I become liable. Now, I will be able to raise a GSTR1 today, meaning I can raise an invoice today. But this invoice which I am raising today, I am not only just liable to pay the tax, I am liable to pay the interest also for the last 1 year, because it is deemed to be a supply on the day of me sending it. So it becomes technically the time of supply for this supply becomes 1st of Jan 2019. So by 20th of Feb 2019, I should have paid the tax. I should pay it along with interest in February 2020. And GSTR1, why am I reporting it? That is to ensure that now this tax credit can travel to my job worker. So when the job worker is returning the goods to me, he cannot bill me only for the services, because as per GST, he is the owner of the goods. As per Sale of Goods Act, he is not the owner. But as per GST, he is the owner. So when he wants to send it back to me, he has to actually give me the value added value. That is, I have sent him 100 rupee worth of goods. It has not come back within 1 year. So the 100 rupee worth of goods is now deemed to be supplied to him. His job work value addition is 10 rupees. So when he is returning the goods to me, he is technically supposed to raise a tax invoice for 110 rupees. He cannot claim only 10 rupees from me because I already billed him for 100. So he can take the input tax credit on this 100. But when it is being returned to me, he has to bill me for 110 as the value plus GST. That is how this transaction will have to be closed. And as I said earlier, in accounting terms, it has got no relevance, because as per accounting, this is no sale, this is no transaction. But for the purpose of GST, this is a deemed supply, which means this will also come in 9C as a reconciliation item. Job work related transaction, if the goods are not returned within the specified time limit. At least in case of input, it is only 1 year. Look at it in case of capital goods. If it doesn't come back within 3 years, we are in for a huge interest. 18% per annum into 3, minimum 54% interest we will be liable to pay if the goods are not coming back within 3 years. Hence, when we are doing GST audit, this is also a provision which we need to factor in our checklist, because we are saying in the Part B certification of GSTR 9C that they have complied with all the provisions of GST law. Section 143 is also a provision under GST law, which if they are not complying, there is a tax liability. Hence, we are supposed to carefully note it and report it as well. I just got a case study wherein I've got few questions also. You can read it for yourself. Then maybe I'll try to give the answers. Mold and dies owned by a OEM, original equipment manufacturer, are sent free of cost to a component manufacturer. So the first question is it leviable to tax? Whether the OEM, if it is not leviable to tax, whether the original equipment manufacturer, merely because he is sending out the goods, he is liable to reverse ITC. Is he liable to reverse ITC? Or the third question is, how long the goods which are sent can stay with the component manufacturer, and is the value of the molds includable in the value of the supply? Now, this is a typical example of a transaction happening. Sounds more like a job work, but it is actually not a job work. I'll repeat, it will sound like a job work. It is not actually a job work because I am sending only the machinery. The mold and die is only being sent. The mold and die is being used by them to manufacture a component. And did I supply the material to them? No. The component is manufactured by them and they are supplying the component to me. In that case, it is not a job work. What they are doing is supply of goods because it is his component which he is manufacturing, sir. But then we are giving our capital goods. Will it not become job work? It has been clarified in the circular given in June 2018. 48 is the circular number, if I remember right. In that circular, it has been clarified the includability of the molds and dies value in the value of supply will depend upon whether in the original agreement between the OEM and the component manufacturer, what have they agreed? Have they agreed that the mold and die will be supplied by the OEM and you just need to do manufacture? Then the value of the molds need not be included in the taxable value because it is already agreed that it is within the scope of the manufacturer, that is the original equipment manufacturer only. But if they had agreed that it is within the scope of the component manufacturer, in spite of that, the original equipment manufacturer sends the molds or dies. In that case, it will squarely become includable in the value of supply by the component manufacturer to the original equipment manufacturer. The value of supply will increase. Consequently, GST will also increase. So this is a transaction which looks similar to a transaction of job work, but I am of the view that this is not a job work transaction at all. The other procedures that are pertinent to job work which warrant our attention are any waste or scrap that get generated as part of the job work process. Like I said earlier, the steel or the any engineering industry related work where we do, that is bound to be a scrap, end bits or wastages that arises out of that. Now, these wastages and end bits, are they going to be sent back to the principal or are they going to be dispatched from the job worker's premises? That is the key part that we need to see. If this end parts and scrap are going to be dispatched from the job worker's premises, it's fine. It should be under our invoice. It should be an invoice of the principal. It cannot be by the job worker's invoice because job worker is not the owner of those scrap. It is me who's still the owner of the scrap. But in that case, if it is going to be supplied from the job worker's premises, then we have to go back to the condition that the job worker has to be a registered person or the job worker premises should have been added as my additional place of business. Else, I'll be in trouble. Because if he is going to dispatch from there and I am raising the invoice and his premises is not registered, I am making a supply from the job worker's premises which is not registered, I am not fulfilling the conditions under section 143. It can result in penalty under section 122. Hence, in that case, even if it is a job worker who's below 20 lakhs, but we have to check whether there is a scrap that is arising on the job worker's activity. If yes, how the scrap is being dealt with. Is it being sent back to the principal or is it being dispatched from the job worker's premises itself? If it is disposed of from the job worker's premises, please ensure that this provision is complied with. If it is anyway going to come back to the principal premises and we can have the documentary evidence that it has come back to the principal's place and then only it got sold, we don't have an issue. Irrespective of whether the job worker is registered or unregistered, there is no problem on that. And any kind of inputs, as I said earlier, inputs include intermediate goods also. So it can be semi-finished goods also, which can come as part of the discussion of inputs. So it is strictly, it doesn't mean that input has to be only raw material. It can also be intermediate goods or semi-finished goods as well. Another Interesting case study. This again from a valuation problem where we have seen practically an issue arising. This was in the erstwhile excise issue we had. JW Limited is doing the machining of steel products on job work basis. Now, MI Limited is the principal. They are coming to JW Limited and saying that we will use your services, and then raw materials are given for machining by MI Limited to JW Limited. JW Limited for the machining activity per se, they charge 5 rupees per job. And any scrap arising on the job work is disposed of by JW Limited, which is the job work limited. They are disposing of the scrap. Is there a problem in this job work? The answer is yes, there is a problem in this job work. What kind of problem is there in this job work? The job work services is not only 5 rupee consideration. That is, for the job work activity, the consideration is not just 5 rupees. The consideration is 5 rupee plus the sale value of scrap. Why do I say that? Because the principal is not raising an invoice for disposing of the scrap. The scrap is being disposed of by the job worker. So technically, there are two considerations that are flowing to the job worker for the job working activity. One, the job worker is being paid on a piece basis, on a job basis, 5 rupees per job, plus he is also getting the non-monetary component of the scrap, which he will be able to sell. He may not be able to realize much, but still it is a consideration. It is a value of my scrap which is generated, which is given to you. So when that is being sold by the job worker, it shall also become an inclusion under the taxable value for the purpose of job working services. So this is where valuation can play a role, or where job work can attract valuation related breach. Is one of this example is this. So whenever we are agreeing with the job worker, two parts we have to be clear. What is the scope? And if it is as per the scope to be incurred by the job worker, if it is given by the principal, it is includable. And anything that is given to the job worker, not only in terms of money, if such scrap or any such, even the packing material which comes around the raw material. In some of the cases, it could be a wooden items. So a lot of wood will be used for packing. That wood particles, particle boards are allowed to be scrapped by the job worker. Then it means that is also part of the consideration. Any scrap that is arising, any packing material scrap also which is arising on account of the material that is procured by the principal, but sent to the job worker directly. In that case also, the money should come. The invoice should be raised only by the principal. It cannot be by the job worker. If the job worker does, that money will become included in the consideration for the job work, and GST will become applicable, including that. And if we find it and tell them, they can stop the transaction or they can pay the tax at this juncture without paying any penalty. But if the department finds out, that is when you will have a lot of explanation to do along with interest and penalty. And the other key provisions, section 16 read with section 19, where the input tax credit is available to a principal even when the goods are being directly sent to a job worker. Section 16, one of the important conditions for availing input tax credit is that I should have received the goods or services, but where in the explanation they have clarified that as long as the goods are received by an authorized agent, my agent, in this case job work is considered to be an agent of mine. If he receives the goods, it is equal to goods received by me. So I can take input tax credit without any issues. It is allowed. It is something which is settled in the erstwhile SENVAT itself, just got transitioned into GST also. So my job worker receives the goods directly. For example, I am ordering something to a supplier in Gujarat. My job worker sits in, let's say, Andhra Pradesh. The goods have to come all the way to Chennai and then to be sent to Andhra Pradesh is not a prudent logistical way of handling. So I can directly ask the goods to go from directly to the job worker's premises in Andhra Pradesh. In that case, the day it is received by the job worker in Andhra Pradesh, where he gives an acknowledgement that I have received, on that day it is deemed to be received by me, and I can avail input tax credit sitting out of Chennai. And the another critical aspect, especially in e-way bill, where I am seeing a lot of issues that can arise in future, wanted to take few minutes to discuss on the e-way bill aspect. Now, on the e-way bill aspect, where is the issue? When goods are being sent to a job worker, we are supposed to raise a delivery challan for the movement of the goods from and to a job worker. Point number one. Now, this from and to movement to a job worker, the delivery challan that is being raised is the only proof that the goods are moving. Many people do not do this. When I send, I raise a delivery challan. When I receive it back, my job worker raises an invoice and gives it back. Now, is it right for a job worker to raise an invoice and raise a e-way bill for that invoice? It is wrong, because the invoice given by the job worker is for the service rendered by him. It is not a supply of goods. And you can raise e-way bill only for an invoice which is for supply of goods. It is not for supply of service. I am sending 100 rupee worth of goods. He is working on it and his job work charges is 5 rupees. Now, when he is returning it, he is raising an invoice for 5 rupees plus GST and raising an e-way bill for 5 rupees plus GST, which is wrong. How can the goods which went out from my factory at 100 rupees plus GST be valued at 5 rupees plus GST when it is coming back? It should not be done. Actually, he can give me an invoice for 5 rupees plus GST, but when he is returning it, he is supposed to raise another delivery challan, his delivery challan, stating that the value of the goods is 105 now. What was received by me was 100. I have value added 5 rupees. So it is now going out at 105 plus GST. And in delivery challan, if the GST value is shown, it is only for the purposes of e-way bill and for the easy identification and assessment of the officer. And it is certainly not resulting in a GST liability. So showing the tax amount in the delivery challan does not mean it will give rise to tax liability. Hence, avoid that apprehension when you are raising a e-way bill for job work movement. Both the ways will have to be captured. Delivery challans will have to be raised specifically by the principal as well as the job worker, because that data is required for later on. We are going to discuss about the only statement pertaining to job work related transactions which we need to file under GST, which is ITC 04. Now, the second aspect, the value of the goods, I've told you already. The value of the goods have to be appropriate. When we are sending it, the stock value has to be mentioned. When it is coming back, the stock value plus value addition has to be mentioned. Then only the transaction is done correctly. The third kind of issue that we are seeing is interstate supply, interstate job work. Before we get into that discussion, any kind of interstate movement of goods for the purpose of job work, the 50,000 rupees limit is not applicable. The 50,000 rupees limit for raising an e-way bill, only when it is crossing 50,000, below 50,000 is optional. That 50,000 limit is not applicable, especially for goods which are sent on interstate job work. So when it is going interstate, we cannot take any amount related exemption. We have to raise a delivery challan with e-way bill. One. And within the state, yes, state-wise there are different limits. For example, in Tamil Nadu it is 1 lakh. We have that limits across state. In some states it is still 50,000. Please follow that limit for raising this e-way bill on the job work related transaction. Now, I'll give a scenario. I am in Chennai, Tamil Nadu, and I am sending goods to my factory in Pune. I have one factory in Chennai and one factory in Pune. Process A will be done by my factory in Chennai. Process B will be done by my factory in Pune, and the goods have to come back for doing process C, and then I'll sell it to the customer. In this case, when I am sending the semi-finished goods from Chennai to Pune, is it being sent for job work or is it being sent as a supply? A very key question, because a stock transfer, we can readily give an answer that it is a supply. It is a deemed supply, in fact, under Schedule 1. But in case of such goods sent for the job work purposes, I am of the view that in that case, it is considered to be an interstate job work only, because I am sending it to my own premises, but it is not done as a stock transfer. It is done for finishing a process. So they will be treated as my job worker, and they will have to finish process B and send it back to Chennai for me to complete the process C. So it will be a job work outward and it has to be a job work inward. And since it is interstate, I must raise e-way bill along with the delivery challan, and the value aspects will have to be taken care, because these transactions across state, same distinct persons unit, goods are being sent for job work, will come under scrutiny in terms of department saying that it is a supply. When we say it is a job work, documentation will only be covering us. against the department's plea. Hence, keep the documentation straight. The other generic provision pertaining to the transitional aspects is, why are we discussing transition? It's been 3 years since transition. Hold on to the discussion because we have something more hitting us, the ITC 04. That time I'll be able to give you the context of this. But how the job work related activities prior to GST were allowed to be transitioned into GST was, section 141 said that any goods which have been sent for the purpose of job work, which have not been returned, sent for the purpose of job work during the pre-GST regime, in excise regime, and which has not come back, on 1st of July 2017, we can disclose it as the challan wise, that is the delivery challan wise, what is lying with my job worker in the tran one. This is something which should have happened long back had it been followed. And all such goods which are lying with the job worker on 1st of July 2017 as disclosed in tran 1 should have come back to me within 6 months from the commencement of this act, which is 1st of July 2017, which means by 31st of December 2017, I should have received back all these goods. And if it is not received within 6 months from the date of implementation of GST, which is 1st July 2017, I am liable to pay the tax on those goods which are lying with my job worker under section 142, subsection 8. So this was the provision pertaining to tran credit itself. Now, we have finished 2017-18 GST audit, but for 18-19 also it becomes critical, because whether you are a financial auditor or a GST auditor, you'll have to look at this aspect, since the time limit of 6 months, if it had not been complete, there can be two kind of deviations here. One, the goods might have been with the job worker on 1st July 2017, they would have forgotten to disclose it in tran 1, possibility 1. Possibility 2, they would have disclosed it in tran 1, but the goods wouldn't have come back within 6 months. In these two cases, if it had not been disclosed in tran 1, but there is no further deviation, it has come back within 6 months, please give a letter to your jurisdictional officer stating that it was missed out in tran 1, but we have got the records to prove that it has come back within 6 months, because tomorrow when GST audit is being undertaken by the department, if they dig up this point, they will say that you had such stock with the job worker, you did not disclose. It is a case of mens rea, knowingly suppressing the turnover, knowingly suppressing the fact, can be invoked by the department. So if we ourselves disclose and we put in the facts before the department, we have a better position to avoid that litigation. Second, whether we disclose or not, we have not received within 6 months, you have to quantify the liability and tell the assessee that you should have paid this much of GST. If you are a financial auditor, this will become a certain liability, not a contingent liability. It is a certain liability which we need to qualify. So tran 1 related provisions impact is still there in GST pertaining to job work, is what I would say. And the practical aspect of how the goods will have to move, Rule 45 says that it has to go under a cover of challan. The goods can go from one job worker to another job worker. I am sending it to one Mr. X, and from Mr. X it goes to Mr. Y. It need not come back to me. It can directly go from Mr. X to Mr. Y. It is allowed for the purpose of job work. What I need to do is I have to account for such movement of goods between me and my job worker to job worker. All these movements, I have to account it to the department by way of filing a quarterly statement called as ITC 04. Not sure why they have put it as part of ITC, maybe because of section 19 also talks about the job work related provisions. They have named the form as ITC 04, and this is one form where there is no late fees. So none of us bothered to file. Even the assessees who are very intent to filing this had a lot of issues in the Excel. So some of them filed, some of them couldn't file. All this problem was happening. And suddenly what the department did in August 2019 was they had exempted this ITC 04 up to 31st of March 2019. So anybody who was liable to file this ITC 04, meaning engaging a job worker, from 1st July 2017, doing transactions with the job worker, starting 1st July 2017 till 31st of March 2019, about 4 plus 3, 7 quarters, they need not file ITC 04, is what they have given as a waiver. A great news. But this news is not a very good news if you are not ready to comply, because they said from 1st April 2019 you start filing. But what they said in that is 1st April 2019, disclose your opening stock lying with the job worker and then start giving the transaction details. So it is not like a clean slate. On 1st April 2019, you cannot report zero as your opening stock lying with job worker, especially when your financial account states that stock lying with job worker is so much. You will have to give a breakup of it, delivery challan wise. So in essence, you have to have the documentary records for identifying what is sent, what is gone to the job worker and how much has come back from the job worker. But you need not file ITC 04 for the 7 quarters. But from 1st April 2019, ITC 04 has to be filed. And there, these data will have to be given, is what is the provision which is existing as of today. And from that only, any auditor, be it financial or GST auditor, will be able to ascertain your liability pertaining to job work, especially the time limits. And circular number 38 of 2017 and 88 of 2019, two critical circulars which details all the process in terms of job work related activities. Few of the processes I have captured here. Delivery challan under Rule 55 has to be issued to the job worker. 3 copies of delivery challan shall have to be raised. 2 copies to accompany the goods, meaning the original and the duplicate for transporter. Both will go to the job worker. The transporter copy will go along with the transport. Original can be sent separately, or it can also go along with the goods. And the job worker, once he finishes the work, he has to retain 1 copy out of these 2. And when he is sending it back, he has to raise a DC for sending the goods back, but he has to give a copy of our DC also. The DC copy, 2 copies he is now having, original and the duplicate. Any one of the copy here, it has to be returned by the job worker. And the DC is to be given even if the goods are sent directly from supplier's premises. So the DC is mandatory in any of the cases where the goods are reaching the job worker, and from the job worker it is coming back. Both the cases, delivery challan is mandatory. And if the goods are going from one job worker to another job worker, I have sent it to Mr. X. Mr. X is sending it to Mr. Y for further job work. In that case, the DC with which I had sent it to him, 1 copy he has to return it to me. Instead of returning it to me, he can endorse it and give it to job worker Y. And once it is going as an endorsed to job worker Y, I can raise the DC to job worker Y, because it is not necessary that 100 units I have sent it to job worker X. He will send all the 100 to Y. Maybe he is sending only 50. In that case, he cannot give the full DC to him. In that case, he can send his DC. I will have to raise another new challan on Mr. Y to get the goods back from Mr. Y. So, me raising a delivery challan as a principle is to fix the responsibility as to with which job worker the goods are lying. Are my goods lying with job worker Mr. X or job worker Mr. Y? How do I know it when I look at my books? My delivery challan will indicate that. If I have sent it to Mr. X and everything is sent by Mr. X to Mr. Y, then the acknowledged copy will be available with me, the endorsed copy, with which I can tell that the goods are now lying with Y. If the acknowledged copy is not received, it is going directly from X to Y, I still have to raise a DC on my second job worker Y, which will be a proof in my stock register to say that this much amount of goods are lying with job worker Y and this much is only lying with X. To identify this, to keep a record of this only, this procedure has been initiated and made mandatory under these 2 circulars read together. And this is the ITC 04 in its latest form, which we are supposed to file. We have come to the last part of our discussion. So ITC 04 is the statement on a quarterly basis before 25th of the following month from the end of the quarter. Let's say for the quarter ending 30th of June 2019, it should have been filed by 25th of July 2019, 25 days from the end of the quarter. Within the time they should have been filed. Now this contains 2 main data. One is what has gone to the job worker, and second is what has come back from the job worker. But that is being asked in a different way. That is why I had to put up the forms outline itself to understand what it requires. In table 4, 1, 2, 3 are general data. That is not of much difficulty, which will be auto-populated. Table 4 asks us to give the list of all transactions that we have done through a delivery challan with our job worker. Whatever has gone from us to the job worker, sent to the job worker. It could be capital goods, it could be inputs. Whatever has been sent from our premises to the job worker's premises, and what is the document reference? If available, what is the GST number of the job worker? All this have to be given. Why this ITC 04 is important from one more angle is that we are supposed to give an intimation to the officer as to who are all our job workers. But such intimation, when initially we tried to give it to the officers were not accepting. The earlier circulars that we saw, 38 and 88, in those circulars it has been clarified. If you file ITC 04 mentioning your job workers' details, we will deem that to be the communication that you have given to me, that you are dealing with such a job worker. So from that respect also, it becomes important for us to file ITC 04 to communicate to the department that we are dealing with such job worker. Hence this ITC 04, table 4, we are giving away the details of whatever that has been sent by us. Now you can see that tax is also there. Why this tax is there? As I said earlier, we are supposed to give the approximate value of what it is going. Where will I get the value? Your stock register will contain the value. The item part number which is being sent, the stock register will contain the value. That value we are supposed to disclose, and the tax corresponding to that we are supposed to disclose. It is not the tax liability. It is only for identification assessment of the officer as to what worth of goods are traveling in this vehicle. If he stops a vehicle, he has to know. For that purpose only we have to give. And don't think for that purpose we can give any value. No, that will result in a different problem. So give the value that is as per your books. So table 4 is simple because it is only talking about what is going from me to the job worker. Now table 5 has got 3 parts to it. Table 5 in essence is what is it that is come back from the job worker to me. But that is classifiable under 3 separate categories. Category A is that inputs or capital goods received back from the job worker to whom it was sent. I had sent it to Mr. A. Mr. A is returning it back to me. That alone needs to be reported in 5A. And in the last 2 columns, you can see even the process losses and wastages shall have to be reported. Because, as I said earlier, it should have come back to me, or I should have only disposed it off. The job worker should not have disposed it off. And here they are asking our original challan reference also. So the job worker sends it by his delivery challan number. We have to trace it to the original challan number of ours. Now, recently in the Excel, they have removed this original challan number reference in the Excel for filing. But for stock register purposes, I still feel it is mandatory for us to maintain. Challan wise, what is pending with the job worker is the ideal way of finding out the stock lying with the job worker. So 5A, we are going to give the details of the inputs and capital goods which are received back from the job worker to whom only it was sent by me in the first place. And 5B, we are going to disclose the inputs and capital goods which are received back from the job worker, but we didn't send it to the job worker, we sent it to somebody, that job worker has sent it to him. The X and Y example which we discussed earlier. I have sent it to Mr. X and Mr. X has sent it to Mr. Y. From Mr. Y's premises, if I am receiving, that is supposed to be shown here in 5B. And 5C is the one which pertains to the inputs and capital goods which is sent to the job worker, but from the job worker premises, it has been dispatched directly from the job worker's premises. So from there, if it has been dispatched, we are supposed to give even the invoice number with which we have dispatched it. Even those details will have to be disclosed in 5C because it is supply of goods from the job worker's premises. Hence, that data is required to be given in 5C. So in essence, 5 contains whatever that has been sent by me in 4, how it has come back. That history is there in 5. That history is being split into 3 categories. What is sent to the job worker received from the same job worker, 5A. What is sent to one job worker but received from another job worker, 5B. What is sent to a job worker but not received, directly supplied from job worker's premises, 5C. And all these individually, A, B, C, shall also include the losses and wastages details also to prove that whatever we have sent, let's say I have sent 100 kgs of aluminum. It is going to be converted into 100 units. But while making it into 100 units, there will be a process loss of 10%. So 100 units will be returned to me. But 100 units, if I weigh, it will not weigh 100 kg, it will weigh only 90 kg. Then what about the 10 kg of scrap? Is it also being returned to me? Should be tracked in this last 2 columns. That is why these 2 columns are there, which will be able to comprehensively cover our job work related provision. So what record we have to maintain is dictated by what is the data that is being asked in ITC 04. So if you are able to cater to the need of ITC 04, your stock records are perfect. From that, you can directly pick up the data and report it. And this is the last procedure that one has to comply to round off the compliance pertaining to job work. I think that brings us to the end of my presentation, and any questions that I can take in the mode or method suggested by the organizers, yes, I can take that.
Yes,
Okay,
many queries are there.
just a
Let
minute. I
it be on
will.
your screen. Yeah, yeah, yeah.
Have,
Please, you
okay,
close
I
your
think I have done that. Have I
PPT.
not done that?
Okay. Yeah, now it's
Yeah.
okay. Now see on the screen. Two, three similar queries are there. Like, what's the rate of for if the gold and
Okay. If
diamond are
both
involved,
diamond and
or
gold
if
are
the
involved, we have to identify
in the
which
jewelry.
jewelry it is. Is it coming under the diamond category, where like a studded jewelry? So it will come as a diamond jewelry. Then in that case, for example, I am buying the solitaire diamond and I have it as a family asset or something. I give it to you for the purpose of fixing it in a ring. So you are only going to invest gold and you are going to fix it. In that case, it becomes a diamond jewelry. You have to go under 1.5%. So here, what I would suggest is please refer the explanatory notes to this specific HSN heading in the services, read with the HSN 71 in the Customs Tariff Act. That will give us the clarity, because different type of jewelry, different types of classifications are there. We have to be careful there.
Okay. Another query is from what's the rate for
If
plastic
again, sir, you have
household
to go by
product
the
job work?
12% category thumb rule, which I told you. If the recipient happens to be a registered person and there is no other rate specifically told, because for plastic products, there
Okay.
is no rate specifically told, then in that case, you can go for 12%.
Okay. Another query is the what is the rate applicable on any waste and scrap generally during job work, and who will be responsible, whether principal or
Okay.
the job
First
worker?
part of the question, the rate will depend upon what nature of scrap that is getting generated. Is it steel scrap or plastic scrap? That has to be determined according to the HSN. It could even be paper scrap. Second part, who is responsible? As I told you during the presentation, it is squarely on the shoulders of the principal. He is the one who is responsible even for the stock that is lying with the job worker.
Okay. Okay. Another query is there. Taxability on scrap is liable by principal, and rate to be applicable which is levied on raw material.
It is not necessarily on the raw material, because as I said earlier, if it is a scrap of steel, necessarily both will have the same rate. But in some of the cases of plastic items or paper for that matter, paper generally is exempted, but paper scrap is taxable.
Okay.
So accordingly, we'll have to find out whether the taxability arises or not.
Okay. One more query is there. Individual running a trade in GST dealer and a co-owner of commercial properties but not GST as other person is not GST registered as he is a salary earner. Is there any compliance required? I'm not getting this query.
Yes, and I'm not able to understand whether it is a job work related question.
Yes, 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 yes. Okay. And one query is from Pragant. Sorry, this is not the query. This is the appreciation. If the job work agreement includes condition that scrap will be retained by job worker and the value is already included in the job work, then what will happen in that case?
Okay, if you are saying that it is already included, did we raise an invoice for the transfer? Because exchange is also a supply. So if the scrap is generated, have we already fixed as to what is the percentage of scrap that can arise? Generally, there will be a normal loss and there can be an abnormal loss also. So all this will have to be factored and seen whether pre-agreed is one part, but what is the value that has transpired? I have given you 100 kgs of copper. You are giving me 78 kg of material only. Then did we envisage that 22 kg will be a scrap?
Okay.
If that is the case, I should transfer the ownership of 22 kg scrap to you by way of an invoice. Then only you become the owner. So there is an exchange. So it is better that you don't factor it inside the rate. In GST regime, it is better that you have it as a separate contract.
And next is what will be the GST rate for job worker on sale of scraps of material received?
The GST rate will again depend upon the scrap, sir. The type of scrap only. I think the same question comes here. What type of scrap? HSN we have to find out.
Okay. Whether sale of scrap to non-registered person by job worker is TCS applicable?
The TCS, I believe you are asking under 206A of the Income Tax Act,
Okay.
which I'm not sure, because income tax is out of my domain. In whatever little income tax I know, when you are selling scrap, you are supposed to do TCS.
Okay, one DC you have told. So whether it's any legal format for that, or we can do our
Yes.
own.
In Rule 55, what should I say, Samutriga Lakshanam of how a DC should look like is given. So you can go there and find out in Rule 55, there are about 16 items which they say it should be there. There is no hard and fast rule that it should be here only. It can be anywhere, but in the document it should be there. So it can be a manual DC with 3 copies, carbonated 3 copies, or it can be a computerized DC also. Anything can be, but that data that is required as per Rule 55 should be there.
Okay. What is the solution if raw material are sent on bulk basis and different finished goods are received in parts, and there is no one-to-one correlation between raw material sent and the finished goods received?
There need not be a one-to-one correlation. What needs to be there is the correlation should be with respect to the document, not with respect to the material. For example, as you said, when you have sent it in bulk, the DC would have been 1 DC. So whenever you are receiving it back, you will, as I discussed for another question, you will always know how much is the yield that should come out of it if it is subject to a process loss. Then in that case, always compute based upon the normal loss category as to how much is coming back. FIFO basis, you keep reducing from the document. That is how it should be done.
Okay. Next query is, which provision attract under section 73 or 74 if supply for job work in pre-regime of GST period and SSC note shown in Tran 1, note received back within 6 months and note approaching to the jurisdiction authority?
Simple. You are liable to pay GST, you are not paid GST. That is the only provision, because the non-receipt of goods within the 6 months from July 2000 and 1st July 2017 would mean that you are liable to pay GST for breaching the provision, which you have not paid. The department has got the right to recover it. So either 73 or 74, non-payment of tax is the provision.
Okay. Did we need any permission before supplying goods to job work?
Not necessary. That is what I told you earlier. The circulars have clarified that you file ITC 04, they will deem that to be a communication that you are dealing with a job worker.
Okay. What about the shrinkage of cloth during job work?
The component that we are measuring is only going to be as per your production process. For example, you are giving it in some length and you know that it will get shrinked, and that is a normal loss that is going to be incurred. Accordingly, you can adjust your inventory. There is no rule in GST that it is shrinking because you have to pay GST. No, because you are not going to receive more than what you have given.
One more query is there. If there is no correlation in raw material and finished good receipts back, how will show in table B of ITC4?
We have to show again, as I said earlier, as per the document. If I have sent 1,000 tons to you and I am receiving every time 50 tons, 60 tons, 70 tons, 80 tons, I have to keep on reducing it from the original document on FIFO basis till I reach 1,000 tons. If the job worker says, no, I have completed and you have received only 960 tons, then the 40 tons is waste or scrap. That 40 tons should have been received. That is how we have to arrive at it.
Is the scraps of part left over the customer which is sold by vehicle service center is taxable?
Yes. And in this case, as I said earlier, most of the time, the customer leaves means he is an unregistered person. So from a customer's point of view, there is no taxability. But if you are selling it, you are liable to pay GST there. And luckily, 9.4 is not there for you. Had 9.4 been there, you should have paid under reverse charge, and then you should have paid tax on the liability also.
Many member requesting for the PPT. If you
send it to you immediately.
Then we will put it into the comment box. You can download from the comment box. Let's take 1-2 queries are there. Sir, in e-way bill, what's the value to be declared? Goods value plus job work value or only job work value?
When it is going from principal to job worker, goods value. When it is coming from job worker to principal, goods value plus value addition by the job worker.
Okay. And same query in I think 2-3 queries are there. Scrap will not be returned back. What is the solution for this?
The contractual solution is between you and your job worker. GST will say pay GST.
Okay. What is the late fees for note filing of ITC4?
That is what I told you. There is no late fees for this form. Hence, it is being grossly disregarded.
Okay. And this latest interest circular, is it applicable retrospectively?
No. This interest is applicable only prospectively from 1st September.
One thing I want to ask from you, because you are taking many lecture on GST, like in earlier you said today we have received a tweet on GST interest rate, and yesterday there was one notification. Then what will prevail, GST tweet or the notification?
Okay, I'll clarify the position because this is a unique situation. What has happened is this amendment had come through in 2019, which they have the Finance Act of 2019. Certain provisions are being notified on an ongoing basis. From 1st January 2020, they made certain provisions applicable, and they were waiting, and they made this applicable provision only from 1st September 2020 onwards, because the amendment itself was not made thinking it to be retrospective. But only in 2020 March, the government gave a word that we will make it retrospective. So the amendment has already been passed in the year 2019. I cannot make it retrospective. So they will make a new bill for 2020 amendment. In that, I think they will make it. So what they have done by way of this tweet or the press release is that, as I said at the start, they have reduced the palpitations that we would have had. All of us were in agitated mode saying, how can government do this? They have clarified that, don't worry, we will not initiate any recovery. This is only to finish the process that we have done. That section has to be notified anyway. So we have notified. We will come up with an amendment as per the 39 GST Council meeting.
Okay. So thank you very much, Shankar Narayan for such a wonderful session, I can say that. And even maximum queries, you have given the solution for the queries. So definitely we'll call you for some other day. I request to you, please give us some more and more time so that we can guide our members, because as you earlier said, when I was preparing and I was going to start the session, there was a tweet. Might be after this session there would also be a tweet will be there. So because government is trying to do the simplification, but instead of going simplification, it's going more and more complicated. So we hope some best from yourself. So thank you very much. Thanks a lot. And thank you very much, everyone. And we have tomorrow another session on faceless assessment at 4:30 p.m. So we'll be there. Thank you very much.
Thank you.